All right, so we know that we have two order sets, and the main reason why you'll have multiple order sets is, well, the same reason why if you've ever used an NinjaTrader's ATM, right? The same reason why you have multiple order sets in the ATM is because of different profit targets, right? So order set A, right, it has a profit target of a 1 ATR, but then for order set B, there's no profit target, so it's going to be a runner, right? So no profit target versus a profit target. So it's almost, I'd say it's 99.9% of the time, the reason why people have, well, actually maybe 95% of the time, the reason why people have multiple order sets is because they want different profit targets, right? So pretty easy way to kind of figure that out. But, some of the other reasons why you might have multiple order sets is maybe to scale in. Maybe you have different entry orders to kind of cost average in, something like that. That would be the other reason. Stop losses, let's see. No, I can't really think of a stop loss ever being the reason why you would have multiple order sets. I mean, it's possible, but really it's not. Stop losses just, really aren't the reason for having multiple order sets, because basically people want their stop losses to be the same. Yeah, which makes sense. So, all right, so our first order set A here, it's going to be a stop entry, right? And so we want it one tick above the high of basically the signal bar, right? So basically just replace that and just say, above the high of the signal bar. So it doesn't matter if it's Bloodhound or some kind of custom indicator. So, all right, so we'll go to our order set, and the first thing that you start with is your entry order. What type of entry order do you want? A market entry, limit, or a stop entry? All right, so in this case, it's going to be a buy stop, and then we can go in here and we can go into the initial placement and adjust the price at which this stop entry will be placed. So we want the high of the signal bar, right? So the mode is going to be price, right? We want to use the bar price. And so here for a long trade, right, it's going to be the high, and then a short trade, it's automatically going to switch to the low of the bar for you. And then we want it one tick above. So let's open this back up. So we're going to take the high, and then we want one tick, not 10 ticks. So let's knock that down to 1. All right, so a positive 1 is going to be one tick above the high. If I do a negative 1, well, that would be one tick below the high, right? So you just take the high price and subtract one tick. Or if it's a positive value, then take the high, plus whatever the offset value is. So, all right, so there we go. Pretty straightforward there. I guess let me also point out here that with the look back period set to 1, that is going to be the signal bar, right? So if you want to reference the high of maybe one bar back, like one bar before or prior to the signal bar, then you would want to look back of 2, and that would be the bar prior to the signal bar, right? So, but a look back period of 1, that is going to be the actual signal bar. So, all right. So we have our entry order. Next, our profit target, just a simple 1 ATR. So we can see on the quick list here, we have an ATR option here. So we'll just click this 2 ATR and then open it up, go into our initial placement. And so you can see that the ATR is in the offset section down here, right? Because we're taking the entry price and we're using an ATR to calculate the offset from the entry price. And then we're going to take the factor here, or multiplier, and knock it down to 1. So there you go. So that's a 1 ATR. And you also notice that it's a 20 period ATR. So if you want to adjust the period setting of the ATR, then we can open this up. And then you can see right in here, we can adjust the period setting for the ATR. So if you wanted to knock that down to a 14 period ATR or a 50 period ATR, to have a longer, broader average, whatever you want. So, all right. Yeah, that's actually it. That's all there is for the profit target. Pretty straightforward again. And so now the stop loss, so it's going to start as a 2 ATR. So, and let's see here. Yeah, so no trailing initially, but if the profit target is touched within 1 tick, yeah, so we do have a custom trailing rule here. So what we'll do, so that is a custom trailing rule. So we'll just start with the 1.5 ATR fixed, right? A fixed ATR here. And we'll open this up, go into the initial placement. And again, down here where the ATR offset is, we're going to go and adjust this to a -2 value there. Right? So that's a 2 ATR offset. So, all right, and now we can create this custom trailing rule here. Yeah, we're hoping in the future, we're hoping to reference the price of the profit target, but we can't do that right now. So that would make setting this custom trailing rule up a little easier if we could actually reference the profit target price. But yeah, we're hoping to get that out sometime later this year. So for now, we're basically just going to, for now, to know where the profit target is, we're just going to have to take, our setting right now. So we know that right now the profit target is a 1 ATR distance away from the entry price. So for our stop loss trailing rule, let's enable the trailing actions here. So we're going to put this on custom, and then we'll add a trailing rule. All right, we'll just call it 1 tick from profit target. Something like that. All right. So to detect when price gets 1 tick from our profit target, right, we're going to use the trigger event to detect that condition, right? Because the stop loss trailing is supposed to, needs to wait until this condition is met here, right? So we're going to use, let's see, what are we going to use here? Price versus indicator. Yeah, even though it says price versus indicator, this trigger is more universal. I mean, you can do price versus price, or you can do indicator versus indicator. All right, so basically what this does, so the price versus indicator allows you to compare two different values. So and those values could be either a price or an indicator. And of course, we also have the swing point prices built in and the linear regression channel as well built in. So, but typically, you're going to be comparing price to price, price to an indicator, or an indicator to an indicator. So in this case, we're going to be comparing the market price, right, which is the last price. Right. So the last price, right, in NinjaTrader. So this is a NinjaTrader price term, and so the last price is basically the current last tick, right? So the current price of the market. So we want the last price. And then for input B, that is where we're going to recalculate the price for the profit target. And so to do that, we're going to go to price. And then we're going to take the entry price here. So we're taking the entry price. And then we want to set up that ATR offset. So let's put ATR in there. And let's make sure we match those period settings here. So, yeah, so 20 ATR. All right, so we have a 20 ATR. And the offset, let's see, was, yeah, it was a 1, yep, it was a 1 ATR. All right. And we want to take that, and then also we're going to minus 1 tick, right? So in order to do the, so if the profit target is touched within 1 tick, right? So that would be, you know, within 1 tick. To translate that, that would be, you know, 1 tick below the resting price of the profit target, right? So what we've done is we've taken the entry price and added 1 ATR and then subtracted 1 tick to get 1 tick below the profit target, right? And so you'll notice that basically this entry price with an ATR of 1, right, matches the calculations here for the profit target, right? The entry price with an ATR 20 period of 1. Right. So, yeah, so input A, again, just to recap here, input A, that's going to be, right, the market price, the last price, and then input B is the calculated price for our profit target, right? And then we subtracted 1 tick since price just needs to get within 1 tick here. Oh, yeah, and the next thing would be the mode. So if we're in a long trade here, let's see. Yeah, so actually we're just going to leave it where it's at. So A is equal or above B. So in other words, so if the last price of the market equals B, right, which is our calculated price of the profit target minus 1 tick. So if price equals that, then that is our condition, right? That is our triggering event that then tells us, okay, we want the stop loss trailing rule to execute, right? To kick in and execute. So then the next step is, well, where do we want to move our stop loss to? And so we want to move it to, and so this is where we're going to say 2 ticks below the low of the last bar, Yeah, so it has to be, so just so you guys understand that, right? So this trailing rule here is going to kick in intra-bar, right? So typically, trailing rules, are evaluated in real time, right? While the bar is building. But when you are referencing prices, you're going to be referencing the price of the closed bar. So that's just how NinjaTrader operates, right? So just by the inherent way that NinjaTrader operates, we're always going to be referencing the low price. And so in this case, the last bar, right, would be the closed bar, I guess, versus the current building bar. So we're just take the low and then subtract 2 ticks from it. And there we go. Yeah, just that simple. And so for a short trade, right, we can see everything's reversed. So we would take the high of the bar and then add 2 ticks to it if it was a short trade. So Okay, and let's see, this, yes, so this really isn't a trailing rule here. It's just a one-time, well, it's a one-time action trailing rule. So it's not a continuous trailing. So it's just a one-time action, right? So the repeat, we're just going to leave it on no repeat. We're going to leave it on none, right? This isn't the type of trailing rule that keeps moving the stop loss, over and over and over again. This is just going to move the stop loss one time. So, yeah, all right. So that's it. So that is our order set A. And so now we'll work on order set B here. Richard already knows that, yeah, we're going to basically copy A. And so what that's going to do is when we copy A, when we make a copy of A here, right, it sets up our entry order for us. So, right, both of these entry orders are going to be the same. So it saved us a little time there. And it also set up our stop loss as well. So both of these stop losses are the same. So, all right. And so now we can move down to the profit target. So there's no profit target. It's going to be a runner. So we can just hit the X there and get rid of the profit target. So now we're just left with the stop loss. All right. So now we just need to go in here and add these extra stop loss trailing rules here. All right. So actually this stop loss actually is going to have a different trailing rule. Yeah. All right. So we want to remain at a 2 ATR, until position A is closed. So basically, that would be when the profit target gets hit. So that'll be our triggering event for moving the stop loss. So all right, let's open this up. Go into our trailing actions. So we're actually going to we're gonna clear this out. Yeah, we're gonna delete this here, and we'll add a new trailing rule here. And let's see here. All right, so when our profit target is hit, we're going to start following the SuperTrend U11 indicator. So in the trigger event, to detect when the profit target is hit, we're going to use, let's see, where is it? Order status changed. Yeah, we're going to use the order status changed here. All right, and the order that we want to check the status of is going to be our profit target, right? Our order set A profit target, right? So A and B, those letters here in the beginning, are referencing your order set name, right? So we want the profit target, right? And so when the profit target is filled, well, that obviously that's going to close. That's going to close the position for A. And all right, so the next step is, we want to move to the SuperTrend, obviously. Oh, yeah, here we go. So we also want to make sure that price, so we have two conditions before we start moving the stop loss, right? So obviously the profit target gets hit, and then we need to wait for price to go above the SuperTrend by 4 ticks as well. So, right. So always keep in mind that when you want your stop losses to follow an indicator like the SuperTrend, you do need to make sure that your indicator is on the correct side of the market for the trade, right? Otherwise, you're going to tell BlackBird to put the stop loss in a invalid location, and that'll just close out your trade. So, for example, if we were in a long trade and the SuperTrend was above the market, well, obviously, if you put your stop loss where the SuperTrend is above the market, then that's going to close out your trade instantly, right? So if you move a long trade, move its stop loss above the market, right? The stop loss just gets hit instantly, and that'll close out your trade. So yeah, so you always need to make sure that your indicators are on the right side of the market before you move a stop loss to that indicator location. So to do that, again, that's going to be a trigger condition here. And so we're going to use the advanced tab now, right? Because we actually have two triggering conditions here. And so both of these conditions need to be true before we move the stop loss. So since they both need to be true, the mode here, so they don't need to be true at the same time simultaneously, but we need all of these conditions, but they can happen in any order, right? So in other words, right, the market could be above the super trend by 4 ticks first, and then the profit target gets hit, right? Right, or of course the profit target could get hit first, and then the market moves 4 ticks above the super trend, right? We don't know which order things are going to happen in, so we're going to use all in any order. So all right, so we have our order status changed there, and so now we need to add a price versus indicator, right? And this time we literally are comparing price versus the super trend indicator, right? So let's see here. So when we say price, which price? Is it, let's see. So since we're comparing to an indicator, yeah, we can't use the real-time market price. So yeah, since we're using an indicator, it can't be the real-time market price. So I'm just going to assume that we want the closing price of the bar to be 4 ticks above the super trend. So maybe the high of the bar 4 ticks above is good enough, but that probably wouldn't be good to use the high of the bar, because the closing price, so like if you're trading minute bars, it's obviously be possible for the high of the bar to go above the super trend, but the close of the bar to be below the super trend. So, that wouldn't be a good situation. So I'm just going to assume that we want the close of the bar to be 4 ticks above the super trend. So we'll use the closing price for A, and then for input B, well, that's going to be our super trend indicator, right? So the mode is on indicator value, and we can see the SMA is right there. So we're going to open this up and replace the SMA with, right, Lizard Indicators super trend indicator. And where is it? There it is, right there. All right, so there's the super trend indicator. And so the plot that you want to use for the super trend is either the stop dot or stop line. They're both the same, it doesn't matter, but that's already selected for us. So now we can go in here and we can see down here on the bottom of the list are the super trend settings that we want to use here. So we have a base period of 3 and a multiplier of 1 1/4 and a range. So a range period of 2. Let's see, reverse intrabar. Let's see. Reverse intrabar, that is false. The base type is Ligure. And let's see, where's the base type? There we go. The base type there, we're going to change it from Wilder to Ligure, and let's open that back up. All right, and the volatility type is, let's see, true range. All right, that's already on true range. And there we go. All right, so those are our custom settings here for the SuperTrend. Oh, and let's see here. Let me get this back open. So input B, there's our SuperTrend. And what I needed to do was add 4 ticks to it, right? So this offset is how we can calculate our SuperTrend plus 4 ticks, right? So we want to make sure that the closing price, right, is greater than the SuperTrend plus 4 ticks. All right, so let's open this all back up. All right, so we have the SuperTrend indicator, right, up here in the indicator section. We have all the settings set, and then we added 4 ticks, right, for a long. If it was a long trade, right, we're going to add 4 ticks. And of course, if it's a short trade, then it's going to be 4 ticks below. So, all right, and the next thing is the mode. So you notice that in the description, it doesn't say greater than or equals, it says greater than. So we need to get rid of the equal part. So we want, open this up, we just want A above B. And then for the short, we want A below B. Pretty straightforward. So what is A? A is going to be the closing price of the bar. We want the close of the bar to be above B, which is the SuperTrend plus 4 ticks. There. And let's see. Yeah, so that does it. That is our 2 conditions here. All right. So, yeah. So we're monitoring when the profit target is filled, and we need price to be above the SuperTrend indicator. So our mode is all. All basically means and. So we need the order status changed condition, and we need the price versus indicator condition. And we could put other conditions in here. And so all means that all of these conditions all have to be met before this trailing rule can kick in, can execute, right? So, and all right, so now we can go in here and set up the price where we want the stop loss to move. All right, yeah, so we're just going to set the stop loss just to the SuperTrend. It doesn't look like there's an offset from the SuperTrend. All right, so let's go in here, and so we're going to move our stop loss to, right, and it's not going to be to the last price. We're going to move it to an indicator value. And so, again, let's open up our indicator list and go to the Lizard indicator folder and find our SuperTrend indicator, and then go in and make our property adjustments here. So a base period of 3, multiplier 1.2 and a quarter, I'm sorry, 1 and a quarter, and range period, there we go, of 2, and let's see, where is the next one? There we go. Our base type is, let's see, where is it? There we go. Base type is Ligure. we got to open this back up. All right, and our offset type again is Wilder, so that's good. And our volatility type is true range, right? And that was good. Okay, so there we go. We've got all of our custom indicator settings plugged in there. And we can see the stop dot is already selected for us. So yeah, there we go. No offset, but if you wanted to, right, you could put your stop loss one tick below the SuperTrend indicator just in case. We'll leave that at 0. All right, and then since our stop loss is following a SuperTrend or following an indicator, typically you will want the repeat set to indefinitely. There we go. And because the stop loss is following an indicator, right? Indicators only update once per bar. So, right, the bar has to close. So the repeat, we're just going to leave the repeat on once per bar. So, all right. And as we can see from the instructions, Richard already knows that he wants repeat set to indefinitely. So there we have it. All right, so I think we're good to go. Let's see here. Let's save this. And then we'll test it. All right, save that. And let's minimize that, and we'll open this up. I will put the SuperTrend on the chart. All right, there's our SuperTrend. Let's see, so the base smoothing is Laguerre. Let's see, yeah, the formula is true range, Wilder, reverse intrabar is off. There we go, base period of 3, offset. Yeah, so the offset period is actually the range period. So that's 2. And then our offset multiplier is 1.25. All right. There, I'll turn off the triangles. Don't need those. And I think that's it. There we go. All right. There's our SuperTrend. I think we have everything we need to test this out now. All right. So yeah, to do a good test here, right, we can see the SuperTrend, right, is above the market price, so we're basically in a downtrend. So let's place a long trade here. There. And let's see. Actually, that was definitely not one tick above the high of the bar. All right. Let's close this out and let's take a look here. What happened here? Let's see, the high, and it is, all right, that's set to 1. That looks correct. Yeah. And, well, all right, next thing I need to do is check my BlackBird, check the calculate settings. So calculate is set to on bar close. All right. Oh, let me check one other thing here. And all right, yeah, I was just checking to make sure that enable automatic order type, see if that was on. Although actually that shouldn't do anything. Yeah, that should not have affected anything. All right, well, let's try this again here. So let's see. All right, let's go long. Oh, shoot. Okay. Yeah, so I hit the go long, literally just a little bit too late there. All right, come on, move up. There, let's cancel that. Let's hit go long again. Yeah, so there we go. So we can see let's see. So what happened here? Oh, okay. I see what happened. So the first time I went long here, I was just looking at this wrong. Yeah, so we can see we got filled on this bar. So the high, so yeah, so the market was literally like one or two ticks above the high of this doji bar. Yeah. So if you place a stop order, basically right there, which is one tick above the high of this doji bar, but the market would have been up here. So we got filled, up here at the ask price. Yep, when that stop entry got filled. So, all right. So I was just looking at it wrong. So I was actually looking at this bar instead of the correct doji bar. All right. Okay, so let's see here. So our current order just got filled. So let's move the market up a little bit. And this is going to be tricky to test, but we want to, hopefully we can see when the market gets, when the last price gets within one tick of our profit target, and then one of our stop losses should move to break even. I'm sorry, not to break even, to the low -2 ticks. Let's see. Oh, yeah. The stop profit target got filled so quickly. We didn't get to see that happen. All right. Well, the next thing is to just, let's see, what are we on? 4 range bars. So, I think, at the close of this bar here, let's pull this down. All right, so once this bar closes, that looks like it should be 4 ticks above our super trend. And there we go. All right, yep, so our stop loss just moved. And, there we go. I'm looking at the red line, but here we go. Our super trend is down here. There we go. There's our super trend. And we can see our stop loss is following that super trend. So, all right, so everything looks like it's working. Yep, there we go. So our stop loss just moved up again as the super trend moved up. Suppose you wanted to trail a stop loss entry above the bars. Oh, okay, I see. So if it's, in a downtrend. All right, okay. All right, we can throw that in. So before we wrap this up, let's turn our entry orders into trailing entry orders. All right. So right now, we're setting our stop entry right one tick above the high price. So if we want to trail that, we'll go into the trailing actions, set the mode to custom, add a trailing roll. All right, give it some kind of a name here. And no trigger. We're just going to do straight trailing here. So typically your entry orders won't ever have a trigger. I can't think of any common practice of why you would ever use a trigger for an entry order. So, I guess maybe the one exception would be maybe you've got a indicator that you're using to set the price of your entry order. So maybe if you're using an indicator, so you might use a trigger to make sure that your indicator again is on the right side of the market for placing your entry order. So I guess that would be the one logical reason why you might ever use a trigger for an entry order. So, but normally you're just going to go straight to the action and set up the location of where you want your entry order to start trailing. So we want to take the high plus 1 tick. Simple enough. And then set the repeat to indefinitely. There we go. Yep, set the repeat to indefinitely. And of course, right, we're going to update this once per bar when the bar closes. So, all right, straightforward. And then we'll just go into our other entry order and just do the same thing. Just copy what we just did there. All right, set this to the high price and then add a tick offset. And then go into the repeat and set the repeat to indefinitely. All right, that's all it took. Pretty straightforward, pretty simple. Yeah, the key was just setting the action, and the move to whatever, prices you wanted to move your stop entry order to. All right, let's save that. And looks like the market's taken off on us. All right. Well, let's move the market down. All right, we'll just let the stop loss get hit any second now. And then I'll place a long entry. All right, there we go. So place a long entry. There we go. Our entry is above, right, 1 tick above the high. And of course, it's going to be the closed bar. So, and there we go. So our entry is just trailing the market down.